Welcome to Wall Street Prep's Financial Statement Modeling course. We're going to start with an introduction, then we'll talk about some general Excel settings and shortcuts that are going to be useful specifically for modeling. Then we'll introduce the Boost Excel add-in that many of you have as part of enrollment in this course. We'll go through some basic formatting best practices as well as modeling best practices in general when you're setting up financial statement models. Then we'll talk about gathering relevant reports for the financial modeling case study, and then we'll introduce the case study itself. So what is a financial statement model? The typical financial statement model has an income statement, a balance sheet, and a cash flow statement, and then it also builds forecasts of those three financial statements. These three financial statements represent the core financial statements for a business. The interaction between those three financial statements, building the model where those three financial statements are interacting on a forecasted basis, really serves as then the foundation for a lot of the common models that you end up building. And in fact, a lot of these common models, all of these models that we've got illustrated here, are models that we are going to build in subsequent courses. So the financial statement model forecasts for the income statement, for the balance sheet, for the cash flow statement, then end up being directly used in models like, for example, the discounted cash flow model to arrive at a valuation thesis for the company that you're looking at. And as I suspect many of you have already sort of thought about, effective modeling requires a combination of skills. It's not just knowing accounting, although I would argue that accounting is probably the single most important skill going into the financial statement modeling course that we're about to go through. Because it's so much about building an income statement, a balance sheet, and a cash flow statement, and really understanding the interaction between those three financial statements, that accounting really plays an important role in not just sort of constructing, but also error-proofing the model and just understanding when the model isn't working, why it might not be working, what are the relationships that we need to then go back and check for. Corporate finance, probably less important in this course than in the discounted cash flow and the comps modeling course, but corporate finance still plays a role in our course today. When we go through exercises, for example, for Apple, and we say, well, Apple is thinking about buying back some shares, so let's forecast the amount of share buybacks going forward. The question then becomes, why do companies engage in share buybacks? And really understanding that requires a little bit of knowledge for corporate finance. We're going to talk in just a moment about what we expect you to know going into the course and what we don't necessarily expect you to know through the course and what we're going to cover. Then, of course, there's Excel. Understanding how to use Excel effectively, especially in the context of financial modeling, the more comfortable you are with Excel, the more comfortable you are with shortcuts, the easier it's going to be. Again, there's some foundational basic presumption that you understand a little bit of Excel going into this course, but we're going to spend a lot of time just going through Excel best practices in this course anyway, so we really only expect a very basic knowledge of Excel. Reading financial reports, being able to navigate through financial reports effectively and understanding where companies bury certain disclosures, or maybe not necessarily bury, but where companies identify disclosures for certain things. For example, some companies will identify, or many companies will identify, for example, non-GAAP type disclosures like EBITDA measurements and things like that in press releases, but not in 10Ks. Knowing where to look for certain disclosures is important. Knowing that companies will often provide forecasts for amortization expense in certain footnotes and stock option disclosures in certain footnotes in certain types of filings, but not others. Sort of just getting a feel for that and getting a feel for the structure of financial reports makes financial modeling much easier because it takes you much less time to sort of find the data that you're actually looking for. So that's something that we're going to go through as part of this course. Then there's company and industry knowledge. Up till now, we've been talking about sort of general skills. But if we're going to build a model for Apple, well, it would certainly help if we had some real expertise in that industry where Apple operates, or the industries, I should say, where Apple operates, because they operate in multiple industries. And also specifically understanding Apple's business and understanding Apple's history and their current operations and their current management, that's going to help as well. Of course, we assume that you have none of that for the purposes of this case study. But what we do, and quite often as finance professionals, especially on the investment banking side, and to some lesser extent on the buy side as well, you sort of borrow industry and company knowledge from others. And specifically, we're going to rely on the expertise of equity research analysts that provide reports with forecasts and explanations about what this company is presumably expected to do. So we're gonna really leverage the expertise of others to sort of fill in these gaps, because we assume that you don't have any expertise in Apple. If you do, that's great, but you don't need to in order to go through this course. And last but not least, attention to detail. This actually can't be overstated, especially for those that are sort of transitioning from school, college, business school, and are now going into work in professions like investment banking or private equity. The amount of importance that your supervisors will place on attention to detail is tremendous. And in fact, the attention to detail, making silly mistakes, spelling mistakes, formatting inconsistencies, these actually are very important because these issues sort of become a proxy for the perception of your capabilities as an analyst or as an associate. And that's important. And so that's sort of an easy one to sort of do well if you focus on it. All these other sort of traits come with time. And I would say probably the most challenging ones is really developing a really solid foundation of accounting and solid foundation of industry and company knowledge. Excel is actually pretty quick to pick up relatively to these other things like conceptual understanding of accounting and really understanding the industry and the company. Excel we're going to go throughout the course. Accounting takes a little bit of time to really get comfortable with. So let's be explicit about what we expect you to know prior to this course. Really, we expect you to understand what the basic line items on the income statement are, the basic line items of the balance sheet and the cash flow statement, and how the three financial statements essentially interact. So how they're related. So when you look at a cash flow statement, you see the net income is the starting line, and that accounts receivable represents, there's an adjustment from year-over-year changes in the balance sheet, and you see that on the cash flow statement for working capital items like accounts receivable. You should have some basic understanding of that. If you don't, I highly encourage you to go to our website and enroll in the accounting crash course. If you go to wallstreetprep.com, we have a crash course that's pretty quick, that's designed to just get you up to speed on accounting in a quick way and in a sufficient way to go through courses like these so that you're not lost from an accounting standpoint. Similar caveat goes for Excel. We expect you to have basic navigational sort of facility and basic understandings of functions in Excel. If you don't have it, again, go to our website and enroll in the crash course in Excel. It's a quick, really solid course that walks you through not just the basics, but really intermediate and some advanced functionality in Excel. So when you come out of that course, you really are an Excel power user. So those are the two things that we expect you to know, at least on a basic level, before you go through that course. There are certain functions in Excel and certain concepts in accounting that for sure we think are a little beyond the scope of basic knowledge, and as we go through this course, we're going to talk about them. But basic knowledge in these concepts we expect you to have. And you don't really need to have any corporate finance knowledge for this financial statement modeling course. Any corporate finance concept you need, we're going to go through as part of this course.